Afternoon, how are we all doing? Sorry, just getting stuff ready. How's everybody? Afternoon, Fletch, Bogdan, Michael, Outro, John, Amy, Burke, Bellino, Steve, Harold, Martin, how are we doing? It's time. It's time, afternoon. So we've had the news out, CPI. Came out at 4%, inflation lower than expected. So, yeah, bye-bye dollar. So the interesting thing about this is obviously because it was 0.1 different to what was forecast, all of a sudden the market's gone, oh, we're definitely not going to do anything with the interest rates, which we already knew because it was forecast at 5.25. So there's no real impact on this, basically. The odds of this going up have just come down, but we weren't going to do that anyway. They're not going to reduce the interest rates. They'd be suicidal if they reduce the interest rates. But so basically, negative US. However, the market doesn't seem to have really done much off of it. So we've got ADRs on Aussie US hit to the upside, come straight back down again. We've got New Zealand US hit to the upside, coming back off the highs, but no real impact at all, just a whipsaw. So no directional bias off of that one. I'm betting on a whipsaw again for the NAS. Afternoon, Virginia. The whippiest Mr. Whippy of whipsaws. There is a good chance of that today. So the indices went a little bit crazy, as you can see. So we had huge double-ended stop runs on all indices. Yeah, so basically anybody that's gone short today or long today is dead. Yeah, so it doesn't matter what you did during Globex, you are flat. So they've cleared the decks, ready for a move. What they will do with that move, don't know. So we'll see. What typically happens after a big news event is we get a fairly quiet open because we've had a lot of movement during the Globex session so there's a lot of the money has been spent. However, this was a whipsaw. We've pushed up a little bit, which is what you would expect on a weak US dollar. But as I said, that US dollar is not that weak, and I'm not sure that there's that much volume there. If you actually have a look at the volume put in, yeah. If you have a look at the volume put in, that's obviously normal volume down here. You can see the size of the volume we normally have during the US session. That's normal Globex. We had a little bit of a spike, so there is quite a bit of volume gone in there, but it's not like off the charts type volume. So I'm not convinced. I think we might just get a normal open and we might have decent moves this afternoon. So we'll see, but we'll watch that. So moving forward for the US, difficult to tell. We would expect it to be fairly weak, i.e. continuation pushes. So we'll see what happens though. The market at the moment really hasn't paid much attention to it. Don't forget, CPI figures obviously are important. However, there's nothing more important than that rate. And what the Fed, more importantly, says is going to happen to that rate over the next 4 to 12 weeks. So tomorrow is the big one for the US. This is kind of a ripple ahead of FOMC. So I'm not actually that surprised. I was expecting to get a little bit more of a move for that, but not that actually surprised that it hasn't gone because obviously we've got FOMC tomorrow. So all that's done, we've just basically grabbed highs and lows. So we'll see where we go. We've got 3 minutes to the open. So Aussie dollar, US dollar was an ADR hit to the upside. 5-minute reversal alert hasn't gone in yet. So there's your reversal alert. We haven't had it. So that is an ADR hit to the upside though. Euro New Zealand. That one, when it's loaded. Oh yeah, there we go. So that one's hit to the downside. Your reversal alert is there. So again, no entry on that one as yet. That would be your entry. Pound yen. That one basically was just a whipsaw, so ignore that. Aussie New Zealand, just while I'm on the looking at the talking about whipsaws, I had an aggressive position on here, which I have got on here, right? Short. I had a stop loss just above that high, so not a particularly big one. As that news came out, right, and this pushed down to here, just before the news came out, the spread went up there. So I removed that stop. So before the news, I don't know if anybody else saw it, but that was the spread. Yeah. Just before that news event came out, I was watching it get wider, 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 wider. It got to there and I basically cancelled the stop. So they spread it by half an ADR just before the news. So crazy moves. So that's pound yen. We got New Zealand dollar yen ADR. So that's just hit. You had a reversal off of ADR early this morning, and New Zealand dollar US dollar. So that one hasn't triggered yet either. Let's watch the indices open. Holy crap. That's a very small NASDAQ range. Haven't tested this on a range that small. This will be an interesting one. So pre-market is that. I'm not even sure I'm going to get the lot size on that. 15 seconds to go. I'd be very surprised if this actually gets a trade on. That's probably going to slip out. Fairly decent one there. Fairly decent one there. We are pushing the lows though. So possibility of market moving fast, triggering no limit orders. We'll see. I know limits are in. All in everywhere. That's good. All good. Long on the NASDAQ. Not quite triggered the S&P. Long on the S&P now. No volume. Whippy. It's going to be a whippy. It looks like it's going to be a stop out and a short flip. And probably a double-ended stop. We'll see. No trigger on the Dow yet. Okay, stopped out, flipped short. Too tight. Yes, double-ended stop out on the NASDAQ. Stopped out on the S&P, flipping short, or will flip short. Short on the Dow. So we'll see what happens with that NASDAQ. There's a tiny little range, no volume, nothing. I mean, it's difficult to tell. You can never tell, obviously, what's going to happen. But we had a fair decent amount of volume, so you don't get the volume at the open because the volume's already gone in. But we'll see where it goes. We might get a move, but we'll quite possibly just have a very slow open. So NASDAQ is going short now, trying to. S&P looks like it's trying as well. That's rolling over. So this morning on the DAX was fairly break even. So 1800 down, 1.8%. TP on. Oh, yeah, sorry, that was the Dow from this morning, wasn't it? I've just realized I've got my times in the wrong order. I'm normally looking at my latest trades at the top. So all stops out this morning so far, or this afternoon so far. Afternoon, Brian. Michael, haha, same as gold, suffered everybody. Stuffed everybody. Oh, right. The whipsaw on gold, was that? I haven't looked at gold. Yeah, big whipsaw. Oh. Oh, look at that. So basically, yesterday's high, yesterday's low. It doesn't matter. If you entered the market yesterday and you are still in it today, you are dead. stops taken, both ends, reset, ready to go. Stolen everybody's money. Okay, stopped out on the Dow, flipped long. Total whipsaw. So 3 losers today. So far this afternoon. So not quite actually. So we just flipped long on that. It could obviously still go long. Stopped out on the S&P. So double-ended stop out, just whipsaw basically today. So we'll see how the EA gets on with loss recovery on inside bar trades. Still got 1 minute to go. So we'll just wait and see what the opening range does. I'll have a quick look at where these things are possibly going today. So Dow. Obviously, Dow are up at new highs now. So if we're going to go long, pick a level. There's nothing basically. So we've got monthly levels we're at the moment on the Dow. So monthly high, obviously, from last month is potentially a good limit order trigger. If it breaks out of that, we're off. Basically, there's an old high there, but it's pretty old. So this could be the Dow, a decent resistance point coming up at the last month's high, which is literally 120 away. S&P, same sort of thing. We're out the highs, no levels. NASDAQ, same thing. We're out the highs. So basically, if we're going long, absolutely anywhere. If we're going short, just look at yesterday's high and yesterday's lows and previous day's lows. So there's no real clues apart from the Dow as to where we may be going if we are going to flip long. So Dow, watch that level there, which is 34,286. That would be your high. That terminal looks like that's frozen up. Right, so covered ADRs. New Zealand dollar yen was the other one as well. That came off the high, but hasn't really gone anywhere as of yet. So we're waiting for a reversal alert on that. As you can see, it's just sideways. So we've got a reverse alert long and short because we've had that big whipsaw put in. So any of these can go absolutely anywhere today. The Euro Swiss hit its weekly level today as well. So that's the first hit of the week. So we are on Tuesday. That's Monday. We had a 200% ADR move yesterday and we pushed out into new highs today. So that is a weekly range completed. Obviously, we're in a contracted range on Euro Swiss as it is anyway. So may or may not come down from there. Already got shorts on it, but difficult one to call that in the minute because we've got the rates coming up on the Euro this week. So those are your weeklies, your weekly range and your ADRs. RSIs, there's not really a lot to look at today. Same as this morning, really. There's nothing on the hourlies. We haven't had a massive amount of movement today, obviously, because we're waiting for the CPI figures. Now the CPI figures are out. Market's really got to decide what it wants to do ahead of FOMC tomorrow. I suspect very little. So I don't think we're going to move much today. So Aussie dollar CAD, big whipsaw down in the middle. So that's just been hovering on the hourly. So 4 hourly, we're extended. So we got extended on that one at the beginning of the week, and we are pushing up. So really nice move on that. Waiting for a profit take. I love that. Aussie dollar Swiss, same thing, extended on the 4 hour. We looked at all these this morning. We were up here when we looked at them this morning somewhere. No, we were down there, weren't we? So we looked at them this morning down there. We've had a little bit of a push up. Yeah, same, extended. Looking for a push back down. Aussie dollar yen, same thing, off the scale. Yen obviously still weak. No reason why it shouldn't continue to be weak until we get the news on FOMC tomorrow. And Aussie dollar, US dollar. So this is tapping into that high. So we've got the monthly levels here. That's last month's high. And the what's that level? 2 month high. I'm on the 4 hour chart. yeah, so last month's high and the previous month's high. So there's decent level there potentially. So it's this whole area here basically where we've pushed up into multiple times and rejected. Yeah, pushing up into it again. Huge move. Obviously, we know the Australian dollar has been absolutely crazy. So we're waiting for that pullback. Nicely embedded, as embedded for the last week. So waiting for the pullback basically. So be that move in reverse, that sort of move, anything basically, pullback. So looking for somewhere around a 38 or 50 retracement on that at some point. Come off that monthly level very, very nicely. So potentially starting to reverse. But US dollar, can't see that really strengthening up. I mean, it's just not really conducive having negative CPI figures for strength. So that's all of your RSIs. So again, nothing to look at. Market's really not moving anywhere at the moment. It's just slow squeezing on lots of instruments, but nothing's really got any directional bias at the minute. We're waiting for news to come out. So I was expecting to get a bit today. We've not got it. So 3 o'clock this afternoon, we've got Bailey speaking. So that's another 20 minutes time. Maybe some movement on the pound there. And then other than that, we're waiting for the PPI figures and FOMC tomorrow. So again, I would expect us to have a fairly quiet day tomorrow until those rates come out and then some movement. But obviously that is ahead of unemployment and then the euro rates followed by the Japanese rates. So every day this week, we've got a potential market mover, but all the time there's a potential market mover coming tomorrow. The market's not particularly willing to move. So hence we haven't got any RSIs and we just stuck sideways. So Aussie New Zealand's made traction. So this, we got a nice push down. So that high sweep we looked at seems to have held. We've just put a new low in. So we've finally got a new low this week. Today, based on yesterday, we just need to crack down and get below these lows here. If we can get back down there, i.e. get an ADR push, I think we're off. So I've got TPs set at that propulsion gap there and second TP set at those highs, which is bang in the middle of that propulsion gap. So I'm looking for a sort of 125 ADR, which brings us into that accumulation, which is where we broke. So that's where that buying rally started that pushed us up into the highs that we're in at the moment. So that's where I'd expect to see potentially some buyers. So getting out of some of it there and the rest of it will get out in the middle of that. Assuming it comes down, we're now in day 1, 2, 3, 4, 5 sideways. Not going anywhere at the minute. Right. So TP hit on the Dow. Trailing into profit on the Dow. So we've got some back on the Dow. Inside bar forming on the NASDAQ at the moment. So basically we've just got that opening range followed by an outside bar, followed by an inside bar. And going anywhere. However, S&P is rallying on the highs. So looks bullish. So if we can get an inside bar here on the Dow, we've got 3 minutes left. Sorry, the DAX got 3. NASDAQ got 3 minutes left. We'll get a break attempts on that. No movement on the Dow. S&P. God, trouble with trading so many indices is I can never get the names of them right. Right, we can catch up on the chat. As ORB looks tiny. Yep, still 2 minutes to go. Yeah, sorry, I'm way behind on the chat, aren't I? ADR, any ADR close on Euro US dollar? Any ADR close on Euro US dollar? Not quite sure what you mean. I don't mean by that. Accidentally used double my risk. Used the wrong set file. Whoops. Double stop out too. Double whoops. Gold made 4 months rent today. How did you make 4 months rent on gold, Steve? It's basically just completely whipsawed. How did you make money on that? Unless you had a short on up here. I don't even know which way this went first, to be honest. Anyway, still sideways though. Look, gold. I mean, we literally are not moving anywhere on gold. Yeah, this thing is just totally sideways at the moment. Really, really got no movement in any direction. Mods and movies. Euro odd squeezing me to death. Anywhere I could go, could have got out along the way. Euro odd. So Euro odd, depending when you got in. So you can see where I got in on the H1 M5 was there. That was the first entry on that extension. Obviously, it's not given any exits on the way out yet. So no. Yeah. I mean, there's only there's 4 positions on this now. So this is where you would start to think, might need to do something about it. That is a very nice signal to go long, obviously. Nice hammer sweeping all of the lows. So potentially pushing back up. So there's no way you could have got out of this one. Hasn't given an exit yet. All the pullbacks have been small, tiny little pullbacks. So no way out of it, really. But you've got propulsion gap after propulsion gap after propulsion gap after propulsion gap. So this is, you can see where I'm targeting here, 225 ADR from where we are now. Is this initial? There's two strong pushes. Obviously, when we broke that low, that's the propulsion gap that broke that low. So that would be your obvious target to the upside. As we push down, that's the first accumulation we went into, pushed, retested, added. Second accumulation, pushed. So that is where I would expect when we pull back to find some sellers if we're going to find some to continue the move. So push, pull, down. So you're going to find that somewhere around about 38 to 50% retracement. So that's the target. Yeah, so 38.50, bang in the middle of the two. Reason being is because that was a strong sell order followed by an addition to the sell order. That is probably where the continuation will happen if it's going to. However, we've got the euro rates coming on Thursday in the afternoon. Sorry, yeah, 1:15. They are forecast to go up. So as long as the market isn't a complete idiot and hasn't factored in 4.25, we will get a bullish run on the euro. So as long as this Australian dollar weakens, and it's had a hell of a run, 6 ADR against the New Zealand dollar. So it's had a hell of a run. It's due to have a little bit of a rest and a pullback. The euro should be able to get a decent couple of ADR this week off the back of that news. So if you need to do an aggressive position on it, obviously you've got a beautiful hammer just got in there on the hourly. So M15, if you drop down, you've just got the reversal alert there. So potentially this could be the point where we actually start that rally from. So it looks good for longs, but no exits on it at the moment, though. I mean, it's just not given a chance to get out at all. It's just a squeeze. It's the Australian dollar. Trouble is, we've been waiting on the euro for the rates. We had positive rates. They decided they didn't like it. So that's where the increase in the rates came out previously. And they reduced for some reason. They overpriced it, basically. Since then, we had the Australian rates come out, which has absolutely slammed the euro. The euro's had no strength whatsoever. So kind of a perfect storm. All these Aussies, literally, they've had a really good, strong run ahead of a rate increase, which gave them an even stronger run, just at the point where no other currencies had any strength whatsoever. So everything's just got extended on the Aussies. They've just had a really good run. But all good runs have to come to an end. They would start to take profit on all these moves, and we'll probably get a bang, bang ADR out. Literally, you'll be out of your P&L within a day or two. It literally will all just vanish and unwind. Just waiting for the move. Like I say, they're just squeezing at the minute. So. Welcome to the Gold Exchange. Thank you for your orders. Have a nice day. I think I may retire from trading and do OnlyFans instead. Okay, Outro. Don't forget you did over leverage. It's your fault. Didn't get the inside bar on NASDAQ, we're not going to get an inside bar on there, but the Dow, we are still long. So guaranteed profit on that. Dow is coming up to ADR as well. So 125 ADR would be TP2 on that. Damn it. Right, big market move coming. We've just had a big push on the US dollar. So US dollars having a bit of a rally. No, it's not actually. Gold will tell us. Yeah, no, there is a bit of strength coming through on the US. So big move down on the indices, going to stop out on that Dow. So hopefully we'll get an inside bar break off of this big candle. So how much have we recouped? 750 so far. 3% down. Going to bank another 645. So that takes us to roughly 2.5%. So that's pretty much where we were yesterday in the live room, and then bumped it up to over 3% by the end of the day. So we'll see how they get on today. Colonel, meant near. So what did we say? Why any ADR close, any ADR near on the euro US dollar? You tell me. You got the indicator? Euro US dollar. So ADR's there and there. Do you use leverage? Yes, everybody uses leverage. Have a short. Had a short before the news. Oh, okay, cool. Someone over leveraged. Yeah. What's the least volatile American index? I would say the S&P or the Dow. So the NASDAQ is the craziest beast. So obviously, look at ADRs. Yeah, ADR on the NASDAQ is 226. ADR on the S&P is 43. ADR on the Dow is 328. But when you look at the ADRs on these two, obviously this is the biggest ADR on the Dow. However, the movement on the Dow is a lot smoother. The movement on the NASDAQ is a lot faster. So this is kind of the crazy beast because you've got 100 stocks in here. You've got 500 stocks in there, 100 stocks in there, and 30 stocks in there. Yeah. So that moves like a little bit of a slug because you've got so many sectors and so many stocks pushing around. This one tends to move nice and smoothly because you've got a mix of all sectors. So there's not a massive batch of sector purchases happening at the same time in there. This one is all tech stocks. So you get anything happening in the tech industry, this thing goes like that because they're all related to each other. So it's a bit of an anomaly, the NASDAQ, and it is the most volatile. A lot of people in futures don't trade the NASDAQ because it is crazy at the open. If you hit the buy button on the NASDAQ, on the NQ at the open, literally, if you closed it, by the time you've moved from that button to that button, you could be $2.5, $3 up or down. It moves that fast at $5 a tick. So this is kind of my preferred, the Dow, because it's very similar in movement to the DAX. But a lot of people trade the S&P because the S&P is like a bit of a slug. There is no right, no wrong. Like I say, look here today. Double-ended stop out, double-ended stop out, straight up TP. Potentially 5R TP, yeah, which will completely undo all the losses today. So you can't say which one will go and which one won't. So if you're going to choose, I would choose one of those because these two, as you can see, they move very much the same. So when one goes down, the other goes down most of the time. Not always, but these two are very, very interlinked. These two and that one there are very different. So I would choose, if you're going to use US indices, the Dow and either or one of those two. But the way that I'm thinking of doing this is using the opening range as a kind of filter. So on days like today, where you've got that on the NASDAQ, there's only one or two things going to happen. A very easy, quick double stop out, or we were going to get a candle, a monster candle, and a double TP. So the risk on that today was very, very high. The risk on that, I would say, was pretty normal. The risk on that, fairly normal as well. So you can, filter out what to trade each day based on what's going on in the market a lot of the time. Same with the DAX. You get these tiny little ranges on the DAX. They're very easy to stop out, which is why there's a filter on the opening range breakout EA to filter out the size of the opening range. I'm thinking of changing this to an ADR-based filter on the new version that I'm working with, but that will help, I think, determine whether or not you should take a trade. The other reason is this candle as well. If that candle is a doji, you've got more chance of your opening range working than if it's a big, strong candle in one direction like that, because you quite often won't get that order on. There's so many variables, this is the edge of this strategy. Is the days it goes, you make a fortune. The days it doesn't go, you get killed. Same as any other breakout strategy. So pick one or two, I would, or three. Reduce your risk by a third. Pick all three. One of them, most of the time, today it's the Dow, will get that break and we'll go while it's waiting for the other two to pull its finger out. How much leverage do I use? 500. Right. A quick look at what's going on with the rest of FX. No more ADRs, is there? So Euro US dollar, we're back to basically where we were before the news. So whipsaw basically today. So all they've done is kind of cleared the decks, no directional movement. Pound US dollar, a little bit more bullish. Aussie US, back to square one. New Zealand US, pretty much back to square one. And the US dollar CAD, just taking out that low. Really nice long opportunity there. So that's the monthly low and previous week's low, or last week's low. However, not sure about that, to be honest, at the moment. We'll wait and see tomorrow what happens with that one. US dollar yen, whipsaw, back to square one. That's not gone anywhere. US dollar Swiss, a bit of a move down on that. So Swiss franc strength today by the looks of things. No, just no Swiss franc strength today. That's US dollar weakness, that initial move. But yeah, nothing to report. I don't think we're going to go anywhere today. I think that's it. We're waiting for FOMC tomorrow, and we're waiting for the euro rate on Thursday. So it's going to be very difficult for the market to actually decide on these CPI figures. Anything different to do. So the forecast, as I say, was 5.25. So we're going to freeze rates. Lower interest rates, lower inflation means more chance of freezing interest rates. So that is more certain than ever. However, that isn't bullish or bearish. That's neutral. However, if that is the freeze, the first freeze of many, there is no other way for the US dollar to go but down from here. So I think we might be looking at the start potentially of a bear market on the US, which means we're going back into a bull calm market on the indices. So it might be time to start buying the dips on the indices. But yeah, we'll see what happens tomorrow. GJ launching. If anybody's got anything else they want to look at, let me know. Yeah, pound yen is off. Is that the pound? So yeah, a little bit of strength coming through on the pound at the moment. Nothing dramatic. So this might be yen weakness coming through. Looks like all the pairs are pushing against the yen. So this is yen weakness. So more weakness coming through on the yen. Again, yen got nothing at the moment. US dollar yen getting a little bit of a rally as well. Just watch this. If this gets anywhere near ADR today or tomorrow, watch that yen power up. Yeah, that's all I've got for you today. This US dollar yen kind of tells the story at the moment, doesn't it? Not going anywhere. Everything is stuck in horrible grindy squeezes, mostly. But yeah, I mean, this is last week. We're not going anywhere. Everything is range bound at the moment. Everything is stuck. Very, very little movement in any direction. New Zealand dollar Swiss pushing up a bit, but sideways. Very, very sideways at the minute. Anybody got any other pairs I want to look at? Long on the NASDAQ and long on the S&P. The inside bar. That might stop out and go short. Stopped out and gone short. I'm going to stop out and go short on the NASDAQ as well, I think. Need some volume today. There's no volume left. So all we're doing is we're basically back to the open. And bearish. Very quiet. 5% down now. Don't forget this is set to unlimited entries as well. So normally you'd have a filter on this, but this is just trading like a crazy person at the moment. Right. Aussie dollar, US dollar, we just got an ADR hit on as well. Oh, no, we haven't. We already had one. Not sure why I just got an alert on that. It's coming down nicely there, Aussie US. Aussie New Zealand's holding. Where is it? Gayrat, what's your opinion on Aussie US? Is it good for a short? I would say everything. I mean, you can see I'm in Aussie at the moment. So yeah, I mean, anything Aussie is due a big pullback. We are extremely stretched and embedded on most of the Aussie pairs off of this rally. The US dollar can't really see having a big strong movement off the back of those inflation figures. So if we look at inflation and where we are now, inflation is now sitting at 4%, down 0.9. The problem that the US are going to have now is slowing that. So it's a little bit like a runaway train inflation. When it gets too high and too fast, you have to put your interest rates up, try and get ahead of it to slow the train down. Yeah. It then comes down the other side. What you've got to do is bring interest rates down fast enough so that inflation doesn't fall through the floor and deflate. If you deflate, that's hideous for your economy. So they've now got the balancing act of going to need to reduce this to slow that rate of deflation so that it doesn't basically get to lower than 2%, because you still need 2% inflation to keep your GDP running, keep everything going nicely. So they're getting close, and their interest rates are far too high. So it's in their interest to bring this down. They have said that they're not going to do that this side of Christmas. If they don't do that this side of Christmas, however, I think if we carry on at that rate, we're going to be way beyond 2% by Christmas. So when that starts to come down, that US dollar is going to come down hard. So that today, inflation coming down faster than forecast is a real sign that they might bring that interest rate down. They're not going to do it tomorrow. I'd be very, very surprised if they did it tomorrow. That would really, really upset the market if that happened. We'd have a 300 ADR move to the downside on the US. When you're looking at anything against the US dollar, like that Aussie dollar, US dollar, you have to think, obviously, there's two things in play here. The Australian dollar has had a massive rally. They are loaded very long on that. They're going to need to get out of those positions. However, they're not going to be able to use the US dollar necessarily to do that, because unlikely the US dollar is going to rally, which would bring this down. So you're reliant on US dollar weakness. So anything to do with the New Zealand dollar or the Aussie dollar negative will bring this down. But I don't necessarily think it's going to be like that, because that would require the US dollar to power up. And I don't think that's coming. The other thing you got to think about is the Australian unemployment figures, which are coming out on Thursday morning. So tomorrow we've got FOMC followed by the Aussie rates, Aussie unemployment rates Thursday morning. So there's two catalysts coming on this. It's massively extended. If you're not already in it, right now, there's no signal to get in. It's not extended at the moment. It's just kind of pushing a little bit. But, you know, moves like this, that fast and that hard, it's very rare you don't get some kind of payoff, some kind of clawback on it. You know, it's the market needs to breathe. And it needs to take profit on those moves to reposition itself. So it's a lovely short at the moment. I need one and a quarter ADR to the downside, really. So if this pushes down back down into here today, tomorrow, easy out. I've only got 3 positions on it. So yeah, it's a good short. You've had the reverse alert on it today, obviously, already this morning. Brian, almost another 3R today on EU before getting stopped. Really would like to get it fully automated. Well, then do it, Brian. You've got the tool to do it. What's that on Euro US dollar again? Yeah. You see, we look at it every day and it looks lovely. But I can't get it to work in the backtester. That's more than 3R, isn't it? No, it's 3R, you're right, yeah. It almost went exactly 3R and then went, no, we'll get out now. Yeah, I mean, the opening range breakout EA can trade this however you want. So just use it, but backtest it. Make sure you can find some settings that work consistently in backtesting. The other thing you haven't got to worry about with that is slippage either. So any trades you take on that will be really easy to get into. The other thing you can do as well is test that on the hourly chart, on the hourly time frame. So backtesting on that will be 60 times, 12 times faster than testing on M5. It should be pretty easy. I might do that this afternoon. I might make my little mission this afternoon to do a bit of testing on Forex. I've got another version of the ORB V2 EA that I'm working on at the moment and incorporating ADR into it to try and find some extra edges on ADR. But at the moment, the back tests are all working pretty well. How many have we got now? 687 tested. Uh, 687 tested, 646 profitable. There's a few unprofitable permutations, which we didn't get on the DAX, but we have on the DOW. 46, yeah. Still 17% drawdown on the high end. Really varies, really varies. Okay, we're out the lows. So we've got, oh my God, look at this. Absolute chop fest today. Again. Oh no, sorry, no, that's a short. That one's working. That was a stop out there. Flip short. Just need one of these. It's exactly what happened yesterday. All you need is 3 moves. You just need the market to just suddenly go bang, bang, bang. Job done. That wipes out all the loss and banks all the profit. Brian, running on 1 hour right now. Yeah, I'm finding the stops are beating you up. Trying different configurations. One other thing you could try, Brian, is not using a stop loss. Have you tried that? So use an end of day close or end of session close instead of using a stop loss. And then you will obviously just take a loss on some. Don't have to use stops. To make sure your risk is not nuts. Aussie dollar, New Zealand dollar. Well, yeah, Aussie dollar, New Zealand. I think we know what's going on with Aussie dollar, New Zealand dollar. It's the biggest squeeze in the universe at the moment. So we're still trying to catch up with that New Zealand dollar interest rate hike that should have been massively positive for the New Zealand dollar, and they decided to completely destroy. So just rolling over now. So we've just done a stop run on the highs. Yeah, so that last week's high level, we pushed up, pulled back, made a new lower high, another lower high, another lower high. So we had 2 days basically where we're enticing people into short positions, which was 98% of retail. Came up, took that high out, rolled back over. Everybody saw the double top, entered short, swept it, dropped, new lower high. So that's your M pattern reversal. Haven't got it on the hourly yet though. Still. So we're still not able to break that support rectangle on the hourly. We had a crack there, missed it. Had another crack there on the news, didn't manage to make it. So until we get that reversal alert in on the hourly, we had it here. No, we didn't. Yes, we did. We had one here. So that was the high, last down candle. That was your reversal alert yesterday. So we did get one and it looked like maybe we were starting the rollover, and then obviously it rallied up again. So this looks good for shorts. Obviously, the fact that we're going sideways and not up means that the buyers are exhausted. There is nobody left with any volume willing to sell. So they are trying to find sellers. They're squeezing higher to try and find more sellers. There's just none left. So it looks like we're about to roll over on it. But Aussie dollar, US dollars, hourly RSI extension. Target is that propulsion gap. That's your big target. That's your little target. Obviously got multiple aggressive positions on this, trying to get out, basically. Squeezing. Time series. Have you seen the new type of challenge released by Blue Guardian prop firm? Never heard of them. In which there's no time limit, no EA restrictions, no trailing drawdown, and 100-to-1 leverage. Never heard of them. Formerly what? Blue Guardian Capital. If I see that magic broker come up, H crap, be running away. No 8 crap logo. So phase 1, 40-day trading period. Unlimited. So there is a max daily loss still at 4% instead of 5%. Max loss at 8%. But I mean, this is the thing. That's never. Who's ever stopped out on their max loss? I've never stopped out on my max loss. Always you stop out on your max daily, and your max daily here is 4% instead of 5%, which is worse than my Forex funds. and E8. Again, might look good on paper, but my Forex funds and E8 blows it out of the water. You know, trading period. Who cares? You can't pass a prop firm within 30 days. You know, or 60 days, as you now have with E8. E8 gives you 60. If you can't pass a proper valuation in 2 months, something's wrong. The strategy's not right. So, yeah, I mean, it looks okay. I don't know who these people are. Never heard of them. Blue Guardian. Uh, 2022. So 8 months old. They've done a press release, which means that they get featured in all of these on a spammy blog post. You get to use their logos. I know all the marketing tactics. They're not as good as my Forex funds, I don't think. I don't think there's any advantage there, is there really? If the US will increase interest rates, how will it impact the yen? They won't increase their interest rates. It's 8 cap, is it? Look under the FAQ under platform tab. Was it 8 cap, was it? Oh my God, that was even worse. This isn't just bad because it's 8 cap. The other worst broker I can possibly think of to ever use is a company called Purple Trading. They are the original broker that you would go and use and then go, how could it be that bad? Market execution, spread, commission, overnight swap spreads. Purple Trade, I traded with them on, who was it? I think it might have been FTMO or CTI. One of the original ones. Basically, they used Purple Trading. They dropped them like a rock very, very quick. Absolutely terrible. And they switched over to the second worst broker I would consider to be in the world, 8 cap. Don't touch them with a barge pole. So yeah, basically going back to interest rates, they won't increase their interest rates. Unemployment is going up. Inflation is coming down really fast. GDP is dropping like a rock. They put that up. That goes up twice as fast. That comes down twice as fast. That comes down twice as fast. If that goes down twice as fast, they go into negative, which makes that drop. Which means that when your GDP is contracting, businesses start to run out of money and sack people and inflation goes up. They won't put that up. They can't put that up. If they do put that up, just short the US dollar for the next 6 months, basically. And buy the yen. So pound yen, you don't want to be buying pound yen because the yen will power up massively. Everything will come down against the yen. They won't do it. Won't do it. That's terminal rate. I'm pretty sure, 90% sure we won't have another rate hike this year. This is coming down too quick. Yeah, look at this rate now compared to the rest of the world. Ignore the Swiss because they are super efficient and they will not let that go anywhere. Yeah. Behind them, you've got the Canadians. Theirs is going up. Yeah. Then you've got Japan. Ignore them because they've had negative interest rates forever. They can't control this because they won't put that up. So ignore their rates. Look at the rest of the world. We are now the lowest inflation in the developed world, coming down at the fastest rate pretty much, apart from the pound and the Eurozone, at the highest rate. That's not going up anymore. They can't. They will absolutely destroy their housing market. People are defaulting on mortgages at an increasing rate. House prices are coming down at a rate which is how the housing bubble initially collapsed. They've got to stop. Not just the US, every country's got to stop this. Because there's people in the UK now that I know that I've got fairly decent jobs and 2 incomes. are not able to now afford to remortgage their houses, because when they took out their initial mortgages, over the last, anybody that's mortgaged themselves into a new mortgage or a remortgage over the last 3 years has had an interest rate of either 0 or 1%. Everyone's coming out of those mortgage rates now, and suddenly the banks are turning around and going, you know, that 1.3 we gave you, it's now 7.5. Is that all right? Oh, yeah, it's double what you paid. I haven't got more income, so therefore I can't afford. And people are just losing houses. So they're selling houses to move down, right? That causes everybody to need to do that quickly. The faster you need to move, the quicker you drop your house price. The quicker the house prices drop, the quicker everything de-escalates and it spirals. If they don't reduce that, at some point in the next 6 months, that housing market spiral will just go through the roof. And they will start to package products together, as they did with the previous housing bubble, where they will take all of the crappy mortgages. They're not allowed to do 100% mortgages now, because that's what caused the crash initially. But there are still crappy mortgages out there. So they're bundling together crappy mortgages and selling them to other banks who can then leverage those products. But what they're going to find is when the people start to default on those crappy mortgages because they can't get the interest rates that they want, their bubble bursts. And this is how it all starts, with high interest rates. It's such a dangerous thing where they are, which is why I think you'll find tomorrow with FOMC, we're going to get the 5.25, and I think you're going to find the Fed is going to come out and say, I wouldn't put it past them saying, I know we said we wouldn't reduce by November, but in light of new data, and if they say that there's a chance of that popping down to 5 this side of November, market's not going to be happy. They're going to be wanting out of that. So when it comes out of the US, it has to go somewhere else. The yen has been very, very weak, and there's talk of interest rate rises in the next year with the yen. So that would be where it tends to flood on, or to the Swiss franc. Yeah, that's the likely impact. We'll have to wait and see. I'm at 1.25 on AA Refi 4 years ago. Got me, Brian? Don't know what that means. I'm at 1.25 on Alcoholics Anonymous. Are you talking about mortgage rates? Right, okay. Yeah, okay. So Brian's got a good example. He's on 1.25 from a mortgage from 4 years ago, is that? Yeah. So when you come around to remortgage, that 1.25, the minimum you'll get is 6 to 7. So when you're used to paying 1.25 on something and all of a sudden you have to turn around, and don't forget, mortgages are the biggest loan you will ever take out in your life. Most people's average mortgage is 250k plus, right? So 1.25% of 250k suddenly churning into 7 to 8% of 250k is more than you will have coming in. It's the old, we've got more going out than we've got coming in, love. Okay, we need to cut something. What can we cut? We can't cut food. We can't cut energy because that's gone through the roof and it's not coming down. What else can we cut? The outgoings. What's the outgoing? Mortgage. Sell the house. Just what happened. That's how the spiral starts. And as that spiral gets faster and faster, everybody gets poorer and poorer. Which is why it's very important to keep these on top of these rates. So we just had a TP on Dow and missed the TP on the NASDAQ. Nice drop there, but very whippy, very whippy. So lots of wicks. Lots of wicks all over the place at the minute. Home equity line of credit now. 1.25 on mortgage refinance. Yeah. Other people, the other thing people do is they remortgage as well. So they remortgage to be able to afford their mortgage, which is obviously what you're doing if you remortgage to afford your mortgage is you basically borrow another 30 grand on your mortgage or whatever in the hopes that that 30 grand sees you through to when the mortgage rates come down. Problem is, if the mortgage rates don't come down or your house price drops by whatever you've borrowed, you become negative equity on that money. There's no way out of it. This is why the banks have to be so careful with interest rates, because it's the one thing that everybody on the planet needs is a house. The one thing no one can afford is a house, and they have to borrow. And the one thing that affects everybody's income is interest rate. So I very, very much doubt we'll get an interest rate rise, but you never know. Stranger things have happened, especially in the last 6 months with the Fed. So we'll see. Right, well, that's what I've got for you today. Market's just an utter nightmare at the minute. So pound yen 125 ADR now. There we go. So we just had a nice big bearish engulfing going in at 125 ADR. So there's your reversal alert there, if this stupid platform would draw properly, which it doesn't. So there's your reversal alert going to go in on 125 ADR on the pound yen. Okay, right. If US keep the interest rate at the same level, Aussie US will long. You're short Aussie US from last week. Yeah. Doesn't necessarily mean that it will go long. Don't forget, there's two currencies at play, right? So if they draw money out of the US dollar tomorrow on FOMC, they have to put it somewhere else. It's unlikely they would put it into the Australian dollar, because the Australian dollar has rallied to such an extent they know there's very little sellers left up there. That's going to come down. So it will go elsewhere. What happens to the Aussie US will depend on the strength of the Australian dollar. So it's difficult to tell. But yeah, any negative movement on the US will tend to be positive movement on the other currencies, obviously. So, but it doesn't mean, if the interest rates come out of 5.25, don't forget, that's what the market has factored in and what the market is expecting, yeah? So you will probably find we just get a little bit of that. In the same way as we've had off the CPI figures today, we have a little bit of I'm not sure. But what the Fed says in the press conference at 7:30, that is what is going to drive the market. If the Fed comes out and says, we think we might have to reduce this faster than we thought because inflation has got a lot softer and cooler than we thought faster, then yes, that will have a negative impact on the US. If they don't say that, unlikely it will have any impact whatsoever, and we might just get a normal move started, in which case this could come down very quickly. Not because of US dollar strength, but because they just unravel the Aussie dollar. And don't forget, you've got the unemployment figures on Thursday morning. So whatever happens tomorrow, if this thing just does that and whipsaws, if the Aussie get bad unemployment figures, that's going to come down. There's two things at play, which is why you need to keep in front of these things, because you've got to not forecast what's going to happen, because obviously you can't forecast what's going to happen, but you've got to think, if that's neutral, what are my options for the Australian dollar? Bullish or bearish? They're forecasting unemployment change up, the unemployment rate to remain the same. So they're forecasting for their unemployment rate not to have moved. If the unemployment rate comes out at 3.8, that's massively negative. That'll come down. However, if it comes out at 3.7, it could go either way. Typically, on an expected news release, if you get the result that's forecast, you tend to get a bullish move on the currency. So, but look at these CPI figures today. That's a miss. The only reason that hasn't gone mental today is because we're waiting for that. Aussie, we've got no reason to wait. Once that news comes out, they will move the market on the Australian dollar. However, if it comes out bullish, it's going to go up. Euro pound. So that's an ADR hit today. M5 reversal alert. There. So just hit ADR. Pound is strong at the moment. Euro is weak. Thursday, we've got Euro news again. So, you know, right now, your entry was there. There's the entry, look. On H1, RSI extension. That was the entry there. Straight in, straight out. Nice quick trade. Pound is bullish, obviously, which means Euro is coming down. It's filling these propulsion gaps. But Thursday, we've got the Euro rates going to go up. So should be bullish Euro. So I'll be looking for buys on this rather than sells. And at the moment, you are pulling back potentially for a second leg up to come and test these highs. It looks like a good buy. May come down into there though. It's 125 ADR today. But right now on the RSI, there's no extensions on it at all. Difficult to forecast that one. Dow is stuck. Right, I'm going to leave it there. I'll be back tomorrow morning at 7:50. Obviously, bear in mind we got Bailey. Actually, Bailey was half an hour ago. UK banks are safe and robust. Yeah, that's what Bailey said. Thanks, Bailey. That's the end of him. So don't forget, tomorrow we've got the pound rates before the Frankfurt Open at 7 a.m. So, sorry, pound rates, pound GDP. So GDP figures don't tend to move the market an awful lot. If they come out really bad, then all good, you can. But it can move the market, but doesn't tend to do an awful lot. So US dollar basically is all about that tomorrow. So 130, we've got the PMIs. The PMIs will probably whipsaw while we're waiting for FOMC. So tomorrow, when you get these massive news weeks, it's kind of not a lot to say. We're waiting for the news. And every day it's like we're waiting for the news. Anything I say is going to be flipped on its head because the news is going to change the outlook. So it's a case of really just looking at where everything is and just managing it at the moment. But tomorrow is obviously the big one. That's the pivotal point of the week. Outro, Bailey's a liar. Yeah. He's a banker. They're all liars. UK banks are safe and robust after the SVB failure. And just because the Silicon Valley Bank failed, why would it indicate that the UK banks are safe? Doesn't indicate anything, does it? It means the Silicon Valley Bank went pop. It's not got to do with anything. And that's old news anyway. What are you talking about that for? Have we not got more important things to talk about? Like, what the hell are you going to do with the interest rates and inflation? Not interested in that, are they? Right, I'll leave it there. ADR on Euro Pound. There you go. There's your alert on that one. So I'll be back tomorrow morning, 7:50, and same 2:20 tomorrow afternoon. We'll have a look. I'll let you know what happens with these loss recoveries. See if we can get some decent recoveries, basically. But at the moment, it's not looking good today. Bit whippy. So we're eating into our, what we're up to, 17, 20 grand profit. So eating away 6% of that so far today. So we'll see how we get on. But just no real movement today. I think tomorrow's going to be the same. So, all right. Like, why is a meal deal now £4? I don't know. I'm stopping shopping, basically, because it's too expensive to eat. So I'm going to live off of liquid diet, mainly beer and wine. They haven't put the duty up on that, so that hasn't gone up in price. I'll see you guys tomorrow. Back 7:50 and 2:20. Good luck with the pound tomorrow, and we'll pick that apart when the Frankfurt opens. All right. Have a good one, and we'll see you guys tomorrow.